Hi, Happy New Year, and welcome to the Stock Investment Monthly Review. Mm. So, today we'll start out with reviewing the returns of all of my accounts in December. My investment account number 1, 2, and 3. And then we'll talk about my Hope Creation Fund and its return performance. We'll finish off with a discussion of the top sectors in 2024. The returns in December 2023 for my investment account number 1 was 5.3%. My investment account number 2 had a return of 5.8%, and my investment account number 3 had a return of around 12.7%. My Hope Creation Fund had a return of around 5.68%, while on the other hand, SPY had a return of 4.6% and QQQ had a return of 5.6%. My investment account number 1, using the long-term investing strategy, had a return of around 5.31% in December. Uh, Note that the account value of my investment account number 1 is now around $19,000. In my investment account number 1, 70 to 80% of the capital is invested in high quality stocks, for long-term investing, with good earnings growth, profitability, competitive advantages, and financial strength. 20 to 30% of the capital is used for hedging risk or enhancing performance by an AI algorithm. Um, Using the same strategy in my investment account number 3. The investment goal for my investment account number 1 is to achieve much higher returns than the market while largely reducing risk. The overall return of my investment account number 1 from February to December is 27.84%, around 30%. This largely outbeats the market or SPY, which only has a return of around 18.7%. So a big difference. Now let's move on to my investment account number 2, using the monthly adjustment strategy. In December, for my investment account number 2, we were holding QQM with 100% capital and a gain of around 5.8%. All of the holdings in this account are determined by an AI algorithm, an ensemble algorithm combining an improved classic quantitative trading algorithm and the seasonality pattern recognition algorithm. The investment goal for this account is to achieve similar returns as the market while largely reducing the risk. So the year-to-date return of the monthly adjustment strategy is 15.84%. So here's a comparison between the monthly adjustment portfolio and SPY. As you can see here, the year-to-date of the monthly adjustment portfolio is slightly less than SPY. But no worries because my monthly adjustment portfolio um by back testing on historical data has much less risk, as you can see from these two charts here. In 2001 to 2002, that time frame where there was a pretty big bear market, um my investment account number 2 had minimal losses compared to the rest of the market. Only a negative 5.8% loss in 2002. In 2008, during another infamous bear market, Um, it again had very little losses, um, an overall negative 2.8%. And in 2022, in yet another bear market, it didn't perform too badly. Um, it did lose some money, but not as much compared to the rest of the stock market. Um, I also have further evidence, as you can see from here. For the S&P 500 index, the max drawdown was a surprising negative 51%, while my monthly adjustment strategy only had a max drawdown of negative 14.6%. Um, it also has a higher compound annualized growth rate overall, and in its worst year had significantly smaller losses than the S&P 500 index, as well as a higher Sharpe ratio. So you could even call this strategy a kind of sleep well strategy, um, where where it sometimes may not have extremely high returns, but it has minimal losses. So overall, a pretty good strategy. Now you may be wondering, what am I holding for January 2024? Well, for January, I am gonna hold QQM with 100% capital. And now let's move on to my investment account number 3, the short-term trading strategy. Okay, now this is where the big gains, like the big money comes in. The return in December for my investment account number 3 was around 12.7%. And the return from November to December in total for my investment account number three was 49.91%, nearly 50% from November to December, like around 2 months or 2 3 months, 2 months. As you can see, here's a comparison between my investment account number 3 and SPY and QQQ. Um, My investment account number 3, as I said before, had a return of around 50% over these 2 months, while SPY and QQ had respective returns of around 14% and 17%. For my investment account number 3, the account is run by a powerful AI algorithm. The features for the algorithm are derived from stock prices, market sentiment, macroeconomics, company fundamentals, and so on. The investment goal for this investment account number 3 is to achieve super high returns while keeping similar risk as the market. So like tremendously high returns and normal risk. Now let's move on to talk about our corporation fund. So again, we have a website called, here's the URL, www.hopecreationfund.com. And here's just like a quick preview. Established on May 18, 2023, the Hope Creation Fund is a philanthropic venture led by young minds. At the Hope Creation Fund, our mission is to make a meaningful impact on our societies, environments, and technologies. We warmly welcome you to be a part of this journey by contributing to our cause. Our fund strategically allocates capital in the stock market um, and welcomes all contributions from the public. After a 6-month interval, contributors have the option to request a return of the initial investment, while the profits from the stock market are um, are donated to to various charities and charitable organizations. Here is a comparison of the monthly returns of the Whole Persian Fund, the S&P 500 Index Fund or SPY, and the Nasdaq 100 Index Fund QQQ. As you can see, the Whole Persian Fund had a return of around 23.5% um, from June to December, and mm, and beat the market by a pretty good portion. Finally, let's wrap up with a discussion about the top sectors in 2024. The earnings, here's a chart of the estimated earnings growth in 2024 for each sector, like healthcare, technology, industrials, materials, real estate, etc. As you can see, this black, dark bluish bar shows the estimated earnings growth for each sector as of right now, and the estimated earnings growth as of September 30th. Meanwhile, here's a different chart for the revenue growth or the estimated revenue growth in 2024. Again, these dark bluish blackish bars show the estimated revenue growth for in 2024 for each of these sectors or industries, compared to the light gray bar, which shows the estimated revenue growth as of September, for like September 30th. So as a conclusion, for a recessionless year, or like for a year with no recessions or a good year, um I would recommend the sectors healthcare, communication services, technology like AI, the cloud services, consumer discretionary, um, real estate, and possibly emerging market stocks from Mexico and India, as these two countries have um, some like possible um, like increases or potential. Yeah, Mexico and India have a lot of potential. Um, for a year with recessions, I would recommend consumer staples, healthcare, um, money market funds and bonds, and gold, as these are usually pretty stable sectors. So overall, this concludes this month's, or actually this year's, stock investment review. So I would like to thank all of you so much for your time to take like your time to just watch these videos. I hope you guys learned a lot from these videos. Um and again, thank you very much for your time um and for watching. If you really like these videos, please like or subscribe. And overall, I hope you have a really great New Year's. I hope you have um an amazing 2024. So again, thank you very much and bye. See you next year.